right, as I said before, Nigeria's stock market has kicked off the first trading week of the second quarter with profit-taking. And we see the banking index has lost that 1,000-point level, now about 900-something points. Could investors be selling the banking stocks because of the bank recapitalization announcement by the central bank? Well, let's find out. Joining us now is Mr. Ike Chioke, Group Managing Director, AfriInvest, joining us right here in the studio. Great to have you.
Thank you. Good morning, Larry.
Good morning. So, I know your research team, you've been advocating for, banks to recapitalize, for a while now, and it's finally upon us.
Yes.
We have the numbers now. Talk to me about maintaining status quo. Would it really be that bad if the banks actually maintained, this capitalization that we currently have? Because everything seems okay.
Well, on the surface, but you have to remember, go back to 2004, when the Soludo-led central bank introduced banking consolidation. At the time, the minimum capital went from about 2 billion to 25 billion naira. And at the exchange rate of the time, that turned out to be about $200 million. Today, with the minimum capital for international banks at 50 billion and national at 25 billion, using the current exchange rates, it's obviously much smaller numbers we're talking about. You're talking like, $40 million and, $20 million in comparison. So the central bank's move the new capitalization to 500 billion for international banks at about 1,250, that's just about $400 million. And if you go to 200 billion for national licenses, that gives you just under $200 million. So that again underscores where the CBN is going, to show that the banks have the capacity, they have the solvency, and have the resilience to continue to support the Nigerian economy. The president has talked about moving the economy to a $1 trillion economy. Currently, our GDP is at $535 billion. So hopefully this new capitalization will be part of that impetus to get us to that direction.
So let's just take, for instance, now the Naira was maybe trading at about 500 Naira.
Yes.
The dollar at this time. Then we wouldn't really be talking about recapitalization then.
You could argue that, but the central bank has also come in and said, we are not going to be including retained earnings as part of your capitalization. And, there are all sorts of discussions around what is really contained in retained earnings. So if you extracted retained earnings and still use 500 Naira as an exchange rate instead of 1,250, you will still require some recapitalization nonetheless. And I think that vicariously, perhaps where the monetary policy authorities are going is to actually invite the private sector to join them in that battle to restore the Nigerian economy. Because if the banks are also looking for capital and the government is looking for capital, then everybody will be singing from the same hymn song, right?
Right.
Yes. You will not have discordant tunes.
Exactly, because we don't need that.
Exactly.
At this time. But, talk to me. We've seen the short-term gains, from this process. But talk to me about, long-term gains, for the Nigerian economy.
I think that when you look at where we are today, we've gone through 8 years of. Okay, let me not go back.
Okay.
But where we are today, we are, the best thing is to say we're probably, recovering from trauma as an economy. And the economic management team have a lot of work cut out for them, both on the fiscal side as well as on the monetary side. And the central bank is doing a yeoman's job trying to control the excesses of the former central bank, as you all know. And so that's part of that direction. But the catalyst will be what then translates into the economy, into the real sector. And the banks act as a sort of an engine to lubricate the economy. Today, if you look at the size of the capital markets, $46 billion, when you look at, the market capitalization, sort of about 58 trillion naira or something like that as of yesterday. If you think of the economies we want to compare ourselves to, like an Indonesia or Mexico, the economies in terms of GDP are $1.3 trillion, $1.4 trillion, and we have $535 billion GDP. We have to be able to move these banks forward so the banks then have the capacity to lend again to the real sector. Because if you look at what has happened to the economy, just because of the movement in interest rates, many companies are suffering. MTN, for example, is reported negative shareholders' funds.
Yeah, we're already seeing it.
Yes, exactly, and that's a major company, so that has an impact. So if those kind of big companies are suffering, you can imagine what's happening to the smaller sectors. But when you have ambitions to drive the economy, then who better than the commercial banks to help you get to that target? That is really why the recapitalization is important.
Now, we still have CRR at about 45%.
Correct.
So I'm still wondering, will the bank still have enough to give out after recapitalization process?
That's important, but we have some short-term problems where the CRR is trying to solve. But as you get more stability in the system, you can see that even coming in from the point of view of the exchange rate direction. Clearly, we are of the view that perhaps by the middle of the year, we'll probably be approaching 1,000 Naira to the dollar, and it could go below that, the way they're going, because there's a Eurobond transaction planned for later in the year, and that also will create more support. And as some of the bigger banks begin to show momentum in their capacity to attract capital, particularly foreign capital, then that again gives more confidence into the economy. And that stability then allows you to then focus on the longer term issue, which is coming from the fiscal policy side. How do we build that platform for growth? Yeah,
because we're aiming for that $1 trillion economy going forward. But talking about FX, we cannot ignore FX, at this time. We've seen the Naira starting off the second quarter of 2024. Quite strong.
Correct.
But are we out of the woods yet, when it comes to the Naira this time? Because some say it's because demand for dollar is not as much in this season, but who knows?
No, well, the signals are positive. Oil production is, up. It's sort of come from about 1,200 barrels per day, trickling up towards now 1.5 million barrels a day.
Right.
1.2 million barrels to 1.5 million. So that helps because, oil is still the main supplier of our foreign exchange. So that's important. We've also seen, inflows, especially from the foreign portfolio investor side, who've come in to take advantage of our very high yields, because MPR has gone up to 24.75%. So the domestic short-term yield environment is very attractive. So for an investor who is seeing that, the Naira is appreciating, I can come in for a short term and get 20+%. And by the time I'm exiting, I also have an appreciation in the Naira. It's a double effect. So that will continue to support. So when you say, are we out of the woods yet? I sort of believe that unless something extraordinary happens on the fiscal side, the momentum of progress towards an appreciated Naira will probably continue for the next few months.
Right, because it's looking really strong, and hopefully there's no headwind, somewhere.
In fact, this morning, the irony is that the parallel market rate is below the official rate.
Quite incredible.
It's incredible. So I was looking at some data. I thought, am I reading this upside down? Because I'm seeing the official at about 1,260 and parallel market at 1,200. And I had to check again, and yes, it convinced me. That's what is happening.
Because so much stability,
there's liquidity at that retail end now.
To most of us right now, we've been used to a lot of instability, in the FX market. But let's look at the domestic borrowing, as you did mention. We're definitely seeing a lot now when it comes to the T-bills and government bonds. We're seeing a lot of action in the fixed income market.
Correct.
For the first quarter alone, we've seen the government raised about 1.8. They're planning to raise 1.8 trillion for the second quarter.
Okay.
We've done the first quarter. Really strong movement there. A lot of borrowing we're seeing, on the domestic front. But we still have a debt problem.
We have a debt problem.
We prefer it to be local.
Yeah.
But it can still be a problem.
It is, when we look at all the parameters, in terms of debt to GDP, debt service to revenue, the parameters we are essentially at the threshold we've set for ourselves or have exceeded. But if we are hoping to expand the economy, the problem with debt is not really whether you have a lot, but whether you have the capacity to service it. So if, for example, you take a company that had a turnover of 10 billion and profit of 5 billion, and the bank say, I can lend you 5 times your profit, that comes to 25 billion. So the direction of growth for the company would be to say, let me move my turnover to 50 billion and profit of 25. And if you lend me 5 times my profit, I'll be at 125 billion. Clearly, 125 billion is a whole lot larger than 25 billion in terms of debt, but your capacity to service it is still the same. That is where the economic management team is hopefully pushing us in that direction. But I think in the short term, what will happen is that we'll probably exceed all our sort of debt control measures in terms of the size of debt relative to the Fiscal Responsibility Act, for example, or if you say debt service to revenue, where should that be? Total debt itself, I mean, I think I saw the last number was at 97 trillion, and looking at the way we are going, we might even overshoot what we have put in the budget for the year. And that will mean that we may have to go to the National Assembly and ask for a supplemental budget to make up for the additional increase in debt. Hopefully, that is all designed to inject money into the real sector, which is the engine that drives the economy. Note that subsidies are being removed in all areas, everywhere. So you see your tariff is now looking going to be more realistic. But allowing for the removal of subsidies in the power sector, that should allow investment to come into the power sector. Right. We're on the advisory side talking to some generating companies, and they are quite excited about it, because clearly, if you look at the exchange rate and the cost of bringing in new power plants, the numbers never worked. But this new subsidy, these new tariff levels will give them more comfort and more confidence.
Yeah, and definitely we hope we get more supply. And hopefully, the average consumer has been through a lot, at this time.
The challenge is, for the ordinary person, it is a lot to ask for.
Too much.
I mean, if you're at the minimum wage, I think it's still 30,000 Naira. I'm sorry, but it is really quite painful.
Quite painful.
So I have not seen the details, but the government really needs to make sure that there's some support at a very low level in terms of how people get some palliatives to survive through the storm until the economic engine begins to kind of kick in properly.
Yeah, definitely quite a storm at this time. Thank you so much for sharing your perspective with us, Mr. Ike Chioke, Group Managing Director.
My pleasure.
It was great having you.
Thank you.
Thank you so much.
Cheers.